The whole Walt Disney Company at that time was selling for $80 million with no debt. The Pirates ride was just about to be introduced at Disneyland. That was going to cost $17 million. So here was the stock selling at less than 5 times rides now. And Walt came in and he said, "Would you like to have lunch with me?" And it couldn't have been nicer. It was a great experience.
Shares in the Mickey Mouse firm sank 3.9% on Thursday. That took them to their lowest in almost 9 years.
And then Disney reports its first quarterly numbers since former CEO Bob Iger returned to the helm in pretty dramatic fashion.
Bob Iger is a home run hitter. I mean, he is really, really good, and he's a great guy on top of that. No,
Well, why don't you own the stock now?
well, I made a terrible mistake. we owned a chunk of Cap Cities ABC and it merged with Disney, and we kept the Disney stock for a while. And then we sold it. That was before Iger took over. But we probably shouldn't have sold Cap Cities ABC because ESPN we owned 80% of ESPN, and that of course has been the home run asset of all time.
Now they face competition. The money is in, the big money is in the animated films and everything that revolves around that, because you go from films to parks to character merchandising and back, and I mean it's a circular sort of thing which feeds on itself. There's going to be plenty of competition in that. I mean they've you've seen what MCA and Universal's going to do in the parks in Florida, and you know what DreamWorks is going to do in animation, and now you've got new technology in animation, through Steve Jobs, and there's a lot of things going on in that field. So the question is, 10 years from now, what place in the mind, because it's a share of mind, it's not, they call it share of market, but it starts with share of mind. And what place in the mind of billions of children around the world and their parents does Disney itself have, and their characters, relative to that owned by other organizations and other characters? And it's a competitive world, so there will be people fighting for that. But I would rather start with Disney's hand than anyone else's by some margin, and I would rather start with Michael Eisner running the place than with anyone else by some margin. So that does not mean that it can't become a much more competitive business, because people look at the video releases of a Lion King and they salivate. You sell 30 million copies of something at whatever it may be, $16 or $17, and you can figure out the manufacturing costs, and it gets your attention, and it gets your competitors' attention. But going back, if I thought the children of the world were going to want to be entertained 10 or 20 years from now, and I had my choice of betting on who is going to have a special place, if anyone has a special place in the minds of those kids and their parents, I think I would probably rather bet on Disney, and I would feel particularly good about betting on him if I had the guy who has done what Eisner has done over those years presiding in the future. Charlie?
Well, I think it helps to do the simple arithmetic. Suppose you have 1 billion children of low middle income 20 years from now, and suppose you could make $10 per year per child after taxes from your position. It gets into very large numbers, and I don't know about your children and grandchildren, but mine want to see Disney. And they want to see it over and over and over again. They don't want to see Katzenberg.
Well,
I mean, in terms of the trade name.
It's a pretty good trade name. I mean, when you think about names around the world, it's interesting that there's very hard to beat the name Coca-Cola, but Disney's got it's a very, very big name. And Charlie's point that they want to see him over and over again, and it's kind of nice to be able to recycle Snow White every 7 or 8 years. You hit a different crowd, and It's kind of like having an oil field, where you pump out all the oil and sell it, and then it all seeps back in over 7 or 8 years.